Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. A new week, Monday. And normally we would start to be thinking like, it's getting later into the month. There's not going to be as much stuff, but we still got like CPI. We've got Federal Reserve meeting. This is like the big week. After this week, well, we do have, let's see here. We do have a week after this going into the holiday. It's going to be kind of a shorter holiday break this year. Only 1 week, but we got stuff. So, but for today, I don't think we have a whole lot, right? Oh, no, we do have a 3 and 6 month. Oh, and a 10-year note auction. So we got auctions today. That's a big deal too. All right, well, let's come to the charts. Do have some rollovers as well. Yes. All right, so we look at ZN. Okay, so on Friday, we got some pretty good numbers from the unemployment numbers, or sorry, the non-farm jobs numbers. Moved us down. We had a pretty excessive pullback. I sat in there forever. I actually did recover my money, essentially. Actually, I ended the day down $10 spot. Like, they did eventually push back towards the low, and here now this morning we are pushing the lows from that news, and I anticipate that we'll probably push for a little bit further today. Come over to the S&P 500. We are getting the rollover here, so that's kind of what that's all about, that gap. Oil moderating a little bit, but I don't know. It's kind of like maybe the selling is done. I don't know. Oil has just been a wild ride the past week or so. Gold and silver took a huge hit off of that report. Kappa, that was doing okay, but it's still kind of like all over the place. Japanese yen. So remember 2 days ago, or sorry, last Thursday, we did have that yen news, and then they got hammered down by the non-farms. Essentially, because, that means rates will have to be higher for longer, essentially, right? The dollar is doing okay, though. Dollar at 104 right now, just above 104. So we'll see which way where the dollar goes this week is going to be a really, really key indication of where we're at, right? So, make sure I got everything in here good. So today, we've got auction flows, and that's probably the biggest thing on our board here. Option flows, and then probably some flows overall, people selling because of the non-farms jobs number being good. So I don't know if that alone gives us a trade. An auction tends to be a little bit of sell before it and buy after the auction. I don't know. I do kind of feel like that they probably want a better interest rate than 4.27, but for now, though, I'm gonna keep. Actually, I can see that I still have my account armed, so I will turn that off. And if we start to get some clear indications of volume coming through, then we might do something. Should note that there was a little bit of selling. I'd say starting before the open, but since the open, it's been mostly buy. It's a very tepid buy. Okay, and good morning, Walter, Dom, Octavius, Jahil, Amir. It's a lot of you here voicing your presence so early on a Monday. So thank you very much, and good job being diligent. So let's see here. What do I want to do here? Well, I changed that. You know, one of the things I've been seeing recently is that these people seem to insist that all of the smart money concept traders are trading CFDs, which I don't actually think is the case. But even if they were, I don't think it would matter, because if the CFD dealer is doing what they're supposed to, they're going out and taking the position in the futures for you, essentially. So whatever the CFD traders are going to do still has impact. But I know there's been a lot of people in the futures trading this, and the thing is that you wouldn't even necessarily have to have that many people doing it. Okay, where did you learn to trade order flow? So there's a couple of sources that I kind of used to learn and to gather my information, like the NoBS day trading course, Jigsaw's training, and then the book Trades, Quotes, and Prices. Where is it? I feel like I'm a salesman for Trades, Quotes, and Prices, but this is probably the best book that you can read about order flow type things. But there's also a lot of experience and figuring things out and testing, doing the science on my own as well. And so I've kind of digested the key things that are already like public information out there and put them into my order flow video series. So if you are just starting out, what I would recommend is watch that video series first, because that will give you the base foundation that you need going forward. You're going to realize that a lot of trading is, I just learned it from this other guy, or people on the internet tend to say this, and so I'm just going along with that, right? And so how do you know what is actually good information and bad information? And what my course does is it shows you the stuff that like we objectively know. Of course, there is my experience in the first few videos, but I think I'm very careful to say this is like what you tend to see happen. This is why I think that maybe that happens. But really what I'm trying to do is paint a picture for you to be like, these are the sorts of things that you will see on the DOM. I'm not necessarily saying you take a trade off of it or whatever the deal is, right? Then you get to the stylized behaviors of order flow, and those are the things that we can objectively prove do happen and that you can potentially take advantage of, right? Then there is a PDF. If you go to speculatorset.com/strategy.html and sign up for that mailing list, it will email you the strategy document. And that goes into a little bit more detail about how you can use those behaviors to optimize your trading, right? And the approach that you take of how to find things that will predict future order flow and combine those together in order to make a prediction about what the flows are going to be, right? Take that. Then you can go out and you can read the other stuff, and you'll be much better equipped to know what things to listen to, what things not to, and how to interpret. Like, I think, for instance, the NoBS day trading course is absolutely great. But if you just take the setups that he describes in that book and start trying to trade those setups, you're not going to make money. Because those scenarios don't actually resolve in a consistent manner. You have to understand like what the larger context is, what are the flows actually going to be, and then when you see those sorts of things happening, it's like, oh, okay, that's a good place for me to get in or not get in, and whatnot. Oh, yep. I guess I should write a book or something, but maybe the strategy document can be turned into a book someday. Well, what was I doing here? Oh yeah, I've been talking about that. I was going to close this. I don't think my brain is completely started for the day, guys. Well, what's the top stories on Zero Hedge right now? Hamas warns no hostage will leave alive if demands aren't met. I think that they kind of already assumed that one. Leadership says that the jobs report was just hyped up. Maybe. You know, I see. It's really funny how you can have all of these different things can be correct at the same time, but because it's all to do with qualitative measures and degrees of things. So, like, for instance, the economy is doing better than we thought it would at this time. But it's also true that almost every one of these job reports are the headline numbers are better than what the report actually is. And then somewhere in the middle is the truth, you know? But it kind of sets up this really strange situation where I feel like almost everyone can find something to try and grab onto to try and justify their expectations of the future, right? But I think when we really come down to it and you look at the data is the economy is still stronger than anticipated, and I think that the market's pricing of 5 rate cuts next year is unlikely to happen. But could we move into a recession or, you know, then be able to back off sometime next year? Perhaps. It just won't be 5. Maybe it'll be 1 or 2. Right? So, you know, so you see what I mean? It's like, well, they're both kind of true. Well, we did get a little bit of upside in the treasuries, but it kind of fizzled out, and they are now settling at this 0.2 half area in the 10-year. TEPCO soars to 2015 highs on speculation that Japan's nuclear winter thaws. I don't know what TEPCO is, but if it's nuclear energy, I want to know about it. So I'll click that and read that later. That little bit of selling may actually be enough if I don't think that I have a strong enough signal today. And so that, but I do think that it's probably short. I do think it's probably short. If I felt like my signal was strong, or rather the imbalance in the order flow that I'm anticipating was strong, I could totally have gone short off of that little shift that we just had. Because it is fairly consistently sell today. What is your risk reward? Well, so I don't try and come in and say I want to make this and lose that per se. It's very much situational, right? Because if I only want to risk $10 and the market is moving like $50 a swing, then I can either increase my risk and trade that or just sit on my hands, right? And a lot of the time I do sit on my hands, but sometimes, like on Friday, I will go and take the risk. It didn't work out so bad, it didn't work out so well on Friday, but it was no real harm done in the end. So, but I think that one of the key things to understand, and this is really difficult for me to tell you because you're saying that you're a beginner. Okay, so just be really careful with what I'm about to tell you. Okay, a lot of trading is about knowing when to break your risk limits. So if you go in, you program some strategy in the back tester, right? And you have this signal and all these things. And then you say, I want to take an 8-tick stop and an 8-tick profit, right? The results that you get out of that system will have more to do with your stop and target than anything else. And what it will tend to mean is when you factor in things like the spread and everything, you're going to win like 45% of the time. You're going to get a 45% win rate with the equal risk reward. And then depending on how large your reward is relative to your risk, so we call that the R factor. So your average loser divided by your average winner, or sorry, your average winner divided by your average loser, rather. That's why they don't like that. That's why we don't like to say risk or reward, because it's actually reward is on top. It's the numerator. But I digress. Okay. That number, that R factor, okay, that's going to determine the percentage win rate that you get more than anything. More than anything. So, if you have a larger edge, sometimes you kind of need to break that mold in order to let that edge actually breathe and take advantage of it, right? So that means that there are times where it's appropriate to kind of mess around with that, all right? Now, but when I say you got to be careful, you got to be careful, because especially when you're a beginner, because the more risk that you take on, the more likely the trade is to work for you. And what you will do is you'll just take on more and more and more risk until the trade works. And then you think that's working, this is working, the trade is working. But what you've really done is you've created a fat tail. So when you do lose, you're going to lose big. And that turns out for a lot of these people that when you lose big, it's you blow your account most of the time, right? So you have to know that, you know, I don't like to have like a set profit and target. Or rather, I have kind of a set where it's like, okay, I'm expecting a certain amount of flow. And if I don't see that flow, then I get out. But so there are situations like on Friday where I have a really strong reason to believe that I will see that flow, and I'm not necessarily seeing contradicting flow. And so I will take on a little bit more risk than I otherwise would, right? Another way that people will do this is you have multiple contracts, you'll scalp across the range, and then try and let it, take the profit that you've made from that range and try and let that trade run and possibly even turn it into a swing trade so that you can get one trade that you just get like a ridiculously sized winner out of. And that can work really, really well. But again, you are messing with the risk. Basically, what you're saying is if I lose, I'm going to lose big. If I get my average winner, I'm going to get like a win that's not as big as that loss. But then sometimes I will catch wins that are really, really big, right? So you have to factor that into your trading and everything, because what your brain will do is it'll say, well, I'm winning. Well, yeah, but you can't see what the long-term expectancy of the strategy is over 1,000 trades, right? So that means that you have to have that. So when you're starting out, I would highly, highly recommend to use equal risk reward, because that's going to give you the best feedback about how you're actually performing. If you take equal risk reward and you're winning more than 50% of the time, that's great. You're doing good, right? But if you're doing something where like your average winner is half your average loser and you're winning like 80% of the time, I can't tell you if you're actually doing good or not. Most of the time doing that doesn't work out, right? So does that make sense? If you have an edge, then taking on risk is kind of that extra little spice that can really make a strategy worth doing. All right? But if you don't have an edge, you can still make money taking on risk, but it's only in the short run. In the long run, that's going to blow up in your face. So that's why you got to be careful with it as a beginner. Make sure that you understand what you're doing and that you really have like a definable edge first before you start messing around with your risk. That makes sense? Ride the express train until you know it's time to get off. Yeah. And don't look back if you could have rode more. Yeah, well, and the way that I like to approach taking my profits is I'm expecting a certain flow. When I've seen that flow come through, I get out. And it's that simple. See, if you actually, I tell you what, if you're actually predicting the flows, the approach is so much better, and it resolves a lot of those questions. Like what should your profit target be? Your profit target should be the predicted amount of flow. If I think that I'm going to see net 30,000 contracts trade through off of whatever the thing is, and now cumulative delta has changed 30,000, then I'm out. And I don't know how many ticks that's going to be or how much money that's going to be for me. That's going to depend on the liquidity conditions, which are, difficult to predict. Difficult to predict that exactly, like number of ticks, right? So new to Orvo, he's an ICT trader but looking to learn the system because I want to get into futures trading. This brings me back to what I was talking at the beginning here, which is a lot of people are telling me that these smart money concept traders are trading CFDs. Is that actually true? Because everything that I've seen has been them on futures. But I don't know. I have a video about smart money concepts you can go and watch, where I basically debunk it and show to you why it's not a very useful concept. So you can go watch that too. See, the key thing for you is going to be understanding technical analysis and why it's not very useful to us, essentially, and why it's not very useful to us. And then not turn order flow trading into another form of technical analysis. Okay, so that last downtick was a little heavy, don't you think? I don't know if they're going to extend from there, but when they moved, like, I saw the liquidity really change. It was just like, I can feel it, like, whoa. It's kind of curious. I'm not really seeing any movement anywhere else that seems too significant, so I think that probably is being driven by the order flow in the treasury. Wasn't even that much either. So it's the robots, something about that kind of caused the robots to do something. Okay, would you recommend for me to learn fundamental analysis? Sorry if I'm asking too many questions. Yes and no. Okay, so what I look at it is what information will predict flows. And that is not strictly what we would consider fundamental analysis, right? Because fundamental analysis is like, what do we know about the company's earnings and how much money they're making, and trying to value the asset based on that sort of information. And here again, a valuation could drive future orders, but it's not the only thing that drives future orders, right? Elon Musk getting up and saying something stupid might affect future orders. There's all sorts of things that will do that, and I wouldn't even necessarily consider them fundamental, right? In fact, a lot of them are more of what I would consider technical, but not like technical analysis, but like technical, like what is the current market positioning, right? Like where do people own options? Because there are places where you move over a certain area, and now all of a sudden options market makers have to continue buying it, and that just pushes it further and further. We talk about that in the Gamma. I have a video about that too, Gamma. So the question, you look at everything, but the question I'm always going to ask when I'm looking at something is this information that is attempting to predict future orders, and what is the mechanism by which it does it? And can they show that it actually does predict future orders? That's what I would look at, right? Now the other thing is that for what we're trading, treasuries equity indexes, commodities. Fundamentals is really macroeconomics, right? So learning macroeconomics is super, super important. So I think one of the best things that you can do as a beginning trader is to go to forexfactory.com. I'll pull this up. I always pull this up when we're talking about this, but we go to Forex Factory. They have this calendar, right? And there is a detail column. So I can look at here and see tomorrow is CPI. Well, what is CPI? It is the change in the price of goods and services purchased by consumers. And then there is a core CPI, which excludes food and energy. And there's the headline CPI, which does include food and energy, right? So I would come in and I would read the description of every major financial report that comes out during the month. And then I would click on this latest release button. And I would come in and read this report. And it comes in and it tells you stuff. And then there's these cross steps and you can kind of see, okay, transportation services increased spot 8% last month. Used cars and trucks decreased spot 8. Energy commodities increased 5%. And that was the biggest component. You're just going through the tabs, right? If you do that for every report, you're going to have a much better idea of what's actually going on in the macroeconomic picture. And that gives you a big leg up over everybody else. And that's probably like the fastest thing that you can do to kind of get in line with it. And if you're doing that every month and reading that every month, and then you'll be at the point where you can start talking about the things like I've been saying, where it's like, well, a lot of these reports, when you go into the detail, you kind of realize that the report is not as good as the headline numbers suggest. But it also suggests that the economy is doing better than we anticipated and probably better than the market is pricing right now in terms of interest rate cuts next year, right? Yeah, that's a really, really complicated thing that we can only talk about because we're reading all of these reports all the time, right? Like, reading these reports is basically my life. You want to get me animated on Reddit, start talking about the data. When I get these people, they talk about stuff and they're talking about the state of the economy and they're clearly not like looking at the numbers or know anything about them. It just drives me crazy. Especially since, again, this kind of provides this picture that where people can kind of see what they want to see. That's why you get all of these liberals out there saying like, why is everybody so unhappy about the state of the economy when all of the economics numbers say that the economy is doing great? Well, you have to actually understand the numbers. So when they say that sort of thing, what are the numbers they're talking about? This is a great one to talk about. You want to learn about macroeconomics. Well, what they're talking about is consumer confidence and consumer expectations. So like the report that we had on Friday that asks, okay, how positive are people about the economy right now and how willing are they to go out and spend more money and things like that, okay? Well, what are those reports actually based on? They're based on consumer expectations about the future of the economy. They ask questions like, is this a good time to buy a car? Is this a good time to buy groceries? This is a good time to do X, Y, and Z, right? And because people anticipate that we're going to continue to see inflation above target, above 2%, all of those numbers, when they do everything, it comes out, it turns out people aren't very positive about the economy, right? Especially, like I tell you what, cars. I anticipated that the price of cars continues to come down into the first quarter of next year, for instance, right? So that's where that number comes from. So they're not necessarily looking at the jobs number and saying, oh, wow, there's lots of jobs in this. That means that this is a really great economy. No, they're looking at what are the prices of goods going to be a year, 3 years from now? And what does that tell me about people's, and do you want to invest money right now? Do you want to buy this thing right now? Do you want to buy? And they don't. And of course they don't, because you're getting all of this inflation, and that matters more than almost anything, right? And so, yeah, you can come in and look at some things and say, yeah, like jobs still really good, employment still really strong. Although we have to understand, employment has been really strong for a long time. Like before the pandemic, it was, we're always getting record low unemployment and things like that. So is it actually that good? That's kind of like the new normal, right? But we're not getting inflation under control, and like people's savings are getting burned out. Like especially older millennials, my age group, apparently are having a very difficult time being able to save money up, being able to live within their means because they're getting squeezed, and that's why those numbers are like that, right? Well, there's a lot of nuance in all of that for me to understand that, to say, well, you're saying the economy is good, but that's kind of a qualitative measure that is not really very objective. The reality is, here's all of these objective numbers that we actually have, and here's all of the detail about it. When you look at the detail about it, kind of see, oh, well, this is why you're getting the numbers that you are. Thanks for your knowledge. I'm definitely going to subscribe. Oh, you're 19? Oh, yeah, there you go. Well, if you're 19, what you should do is you should get into a really good school and try and get hired by a Wall Street firm. I always, that's probably a projection, because if I could go back, that's probably what I would if I was going to do something differently. I don't know if I would do things differently. I think that my strength, this is the really ironic thing about this whole thing and what we're doing here in the channel, is that my strength is on the computer side. My strength is understanding computer systems and finding problems and making them better and so forth. And I get paid really, really well for that. And that's what gives me the ability to take on risk and to even do this in the first place, right? And that is one of the best gigs in the economy. And so I don't know if I would change it. But I do wish that I had the opportunity to go and trade for a large firm. And, if you're a kid and you're interested in finance and you've got the grades and you're into the math and stuff, that is absolutely a way that you can go. Because I tell you what, if you're 19 and at 19 that's what you want to do, that gives you a big leg up, right? Because a lot of the people that are in the financial industry, especially on the quant side, I tell you what, they did not go into this thinking that they were going to be quants, right? A lot of these guys, they did physics. They did physics, and then it turned out that all of the math that they learned in physics was really, really useful for finance, and then they got hired over into the financial world, but they never intended to go that direction. I thought that max allocation on prop firms was the way to go. Computers, nah, because here's the problem, is that it takes money to make money, and that's kind of one of the, I wouldn't say that this is like one of the themes of the channel. There are like key things that I want people to learn and understand. Market is not efficient. The market is very statistically efficient, but it is not very informationally efficient. Markets are very competitive. It's very difficult to make money trading because of all of these facts. But kind of underlying all of this is this thing that's like, you're probably not going to become a millionaire trading futures. That's what everybody expects, but it's very unlikely. I bet you that out of 300 people, maybe 5 people actually do that, and 3 of them were probably just lucky. Like the stats are just not very good. Whereas if you go and you get hired by a big bank and you go and work for like a Goldman Sachs or there's countless hedge funds out there or wherever it is, right? You can do real trading. They kind of do some of the hard stuff for you, like this summing up all the flows and everything. They have the ability to do that quantitatively, and they have all sorts of data and information that we don't. And then all you have to focus on is the execution of it. And I tell you what, that's a way better gig. And that's a way better way to go and become a millionaire, right? So, and then if you've made the money, right? So my understanding is that Lloyd Blankfein, after he was done being CEO of Goldman Sachs, he was day trading, right? Okay, yeah, if you have millions of dollars already to take risk on, that allows you to take big risks with asymmetrical payoffs that can really, really work in your favor. But when you can only afford like 4 ticks of risk over here in the futures, really hard to go very far with that. So, or another way to put it is, futures trading almost always starts as a side gig, right? You need to have a day job that is sustaining the majority of your needs, and you have excess capital, and then you can go and risk it on futures, and maybe it pays off, right? Late start for Tacticalton. So Monday, I don't know, man. We had Walter, Dom, Octavius, Jahil, Emir. They were all here, man. You were late. Tisk. Better luck tomorrow. And it's this is also like a kind of a personal thing, because I've seen so many people come in and do really dumb stuff with futures that really couldn't have afforded to do it, So don't be one of those people. Be smart. Only risk capital that you can afford to lose. Go and trade for a firm if you can, if you're young. See, one of these days, 5 years from now, somebody's going to come back and they're going to tell me, oh, I ended up working for Goldman or Morgan Stanley or whoever it was because of you, Seth. And then I'll know that I've accomplished my purpose in life. I want to leave people better than I found them. And if there's somebody they want to trade and I can get them into professional trading rather than becoming a retail trader, then that's a big, big win. So we had drifted back up towards that high again, and we got another kind of like aggressive sell there. Slept at 9, woke at 11, and couldn't sleep. Yeah. Dude, yesterday, so we got home late on Saturday night, so we slept in pretty good on Sunday, and I wasn't able to sleep in, and so I took a pretty good nap before lunch. But then it was a little difficult to go to sleep tonight. Hopefully, though, I've been getting much better with the workouts, and I tell you what, when I have a good workout, I sleep like a baby. And this most recent time, I feel like that the biggest thing holding me back from really, really making progress in my weight training is sleep. Because I wake up so early. And I probably need to get be getting like 9 hours of sleep when most of the time I get 7. Oh my gosh. Okay. So I was just here on Reddit, and the title of this post was, I will not be bullied into adopting another nonsense millennial tradition where I tell increasingly outrageous lies to my kid. And then the picture is Confession Bear saying, I don't do Elf on the Shelf, and I make sure my kids know it's not real. I don't care if they relay that info to other kids in their classroom. Does anybody actually into Elf on the Shelf? I don't understand the mentality of the people that like Elf on the Shelf. I think the whole thing is creepy. I think the whole thing is a little creepy. Cash app stocks. Well, I don't know what you mean by cash app stocks, but you can trade stocks. Trading stocks is very different from what we do in trading futures, because what we're doing in futures is kind of more macroeconomic. What you do in stocks, so there's positives and minuses to stocks. Okay, the two biggest advantages that you get in stocks is one, there's a wider spread, so there's a little bit more opportunity for you to make money just from like the purely market making aspect. And there's a lot of stocks to choose from. So you can go and trade a different stock every day and just always trade a situation that's favorable to what you want to do. Always trade a stock that's trend day up or whatever. That's what I would do if I was trading stocks. I would just always look for the one that's the mover that I expect to move all day and trade that. The disadvantage, though, is that there's a lot of information to know about any one individual stock, and you're not necessarily an insider. So your ability to actually predict flows may be very limited in a stock. So there's positives and minuses to it. I also, generally speaking, I'd say it requires a little bit more starting capital to do it in stocks because you have to have that pattern day trader rule. So, got any opinions on oil's direction? I wish. Well, I have opinions, but I don't know if they're any good on oil, man. Because I thought when the OPEC made the deal and everything and said that they were going to reduce output, that was going to help oil and that maybe we could get, because I'm still like, I think that we could go back to $100 a barrel sort of a thing. Like if the economy is not falling apart, we could get to $100 a barrel. But no. They did the exact opposite. They've sold since then. They've sold super, super hard. It's a little perplexing. I still think that oil is going to base and move higher here. I am still kind of looking at oil stocks, like companies, to maybe put some money into the market in that sector. But I'm kind of wary about doing that because I clearly don't understand the oil market enough and what predicts the future orders in that market. I live in a developing country in the Caribbean. That's why I believe the money from the prop firms is still good because the USD is double the current. Yeah, so I'm finding that as a theme, and I'm not quite sure what to think of it. That people outside of the US and the major European countries are kind of see the prop firms as a better risk reward. That may be the case. I don't know. But like that kind of puts you in this space that's like, okay, I can afford to pay $150 a month to try and pass the prop firm, but I can't afford to spend a few months saving up maybe $5,000 to trade that. Is like, so if you're in that situation, is it really worth it to you to do the prop firms? I mean, I guess that might be better than doing an account, but that's also like a lot of capital that you're putting into something that you're probably not going to have success with, right? So the answer might be, I would still say, create a live account. Don't trade it live, just pay for the data and use that to practice. But focus primarily on, building, a living that is, really gives you the ability to take on that extra risk. I tell you what, man, if you're into the computer science, there's no, in terms of the amount of effort that is required for what you get paid, if you are into it, and that's one of the key things. Not everybody can do this. Not everybody can do the computer stuff, which to me is like, I can't imagine being like that, but I just know from talking to most people can't do it. Even if they went back and they tried really hard, and some people are just built differently, man. But it is very, very much in need in this economy. So I think that computer programming or somewhere in the, because of course the industry will continue to evolve, but if you're into it, you're going to continue to be at the forefront of that, and you'll find whatever sector of the industry has got the most money in it, right? But that's probably your best reward for the amount of effort in the economy today is in computer science. There are things that pay more, But to do the things that pay more, you're starting to talk about making like really big sacrifices or doing really super, super complicated things. But I don't know. This is something that I feel that the modern democracy has not done very well, is explaining to people that I think that we have this idea that whatever it is that you want to do, you can just in one moment decide that that's the thing that you're going to do, and then tomorrow go out and be successful with it. That's not really the way that it works. We want to think that like leading a country is something that anybody can do. No, most people are not set up for ruling a country. And yeah, if your dad ruled a country, or if your dad was a really good computer science engineer, you are very likely to be able to be good at that thing as well. Doesn't mean that you have to do that thing, but you can. And so you do end up with classes of people. And we kind of have to come to grips with people's different abilities and find a way to deal with that in an equitable manner, right? Because the way that we've dealt with it is just been like, oh, it's a point of privilege, so everybody should try and go and get that privilege, and so then everybody tries, and you get a bunch of people that can't hack it. I learned front-end development on my own during COVID, but then I put it on the back burner due to the fact that I saw a lot of people getting laid off currently pursuing a business degree. Well, so a lot of people did get laid off, but like the thing is that they all found jobs very, very quickly. One thing I would say, if you're getting into that, is there used to be this really clear segregation between front-end development and back-end development. A large part of that was that front-end development required so much esoteric knowledge about HTML and JavaScript and all of these compatibilities between browsers and things like that. And on top of that, like the design aspect, that it didn't really, you couldn't really do both. But what has happened in the industry more recently is, number one, is like the design aspect is kind of gets ripped out and turned into its own thing. So there is somebody that is in charge of just deciding what it's going to look like and how it needs to function, and they're an expert in how users, UI designer, right? And then the front end and the back end development get combined together because there's not as much esoteric knowledge required. We have React and we have Angular frameworks, and these both solve most of those problems. And they're something that just about any developer can pick up. And so you're seeing a lot more full stack. That's what we call it. A lot more full stack. So that's one thing that I would keep in mind. So it's kind of turned into, there's like full stack. The API developers are often just focused on API. And then there's the whole cloud DevOps site reliability world, which is kind of that has kind of become the new frontier, because we're getting to the point where we understand development pretty well. When I came into the industry, the whole like agile development wasn't a thing yet. Jira wasn't a thing yet. Ticketing systems weren't a thing yet. It took a decade or so for, I think, companies to figure that stuff out, right? I'm also into our culture. I feel like I do too much. Or maybe you're a little ADHD. Some of the best futures traders that I've ever met were farmers, man. I tell you what. I don't know what it's like in your country, but here in the United States, there is like a real dichotomy in like people that live in the cities. Like it is super expensive and they don't have anything. But there are people that they can be working just regular blue collar jobs, making average wage, but it's just they live in the middle of nowhere, and so they're perfectly content with what they have, and then they end up with that extra capital, and yeah, they trade it. Okay, so I'm a little suspicious because we have been getting what seems like aggressive drops that sputter out very quickly. But I did see a little bit of a slip there in the 5-year. I'm going to recenter here. That last down tick looked significant to me as well. Looks like maybe one of my charts is behind here because... Oh, no, it's right. Nobody's traded O2 yet. We'll see if somebody touches it just to make sure my chart's still working correctly here. Nope, I guess not. So can I show you something that I think is kind of interesting about the way that I have my chart set up? Is the treasuries, move so little. If you use candlesticks, a lot of the time you'll get dojis. And so you can't even see the chart. So I've moved to these bar charts, which just show you the high and low. But when I look at it that way, I kind of start to realize that the high and low in terms of liquidity is what matters the most anyways. I think. Not that there's really anything in this chart that the only thing on this chart that I really feel like really gives me edge is this cumulative delta. Oh, I take that back in the spread. You can be able to see the spread too. But like, I'm not trying to read the price action or anything like that. Do you ever have a problem when it comes to the mental side? Every day. So this is one of those things where it's like, if you have an edge, the thing is, market's very statistically efficient. And that means that like a really good edge is going to incorporate your knowledge of the market, your ability to interpret news in this situation and make decisions and things like that, right? So when it comes to that, that's a really complicated thing. And doing that well consistently is very difficult as well. And so your health and your psychology play a major factor into that. Getting your brain to where it is functioning optimal as much as possible is a huge aspect. But that's if you have an edge. If you don't have an edge, then that stuff is practically useless. I'd even say it's impossible to really truly develop that strong mental edge without having like a real edge in the trading first. Because if you're just trading technical analysis and you're trading a random line, that's going to make anybody go crazy, man. It's going to make anybody go crazy. But, I think the biggest thing that helped me is just sizing down. Sizing to an appropriate amount of risk. Because coming in and losing, like $1,000 in a day, when I didn't really want to risk more than a few $1,000s, too much. Sizing down so that it's more in line with my risk tolerance and the size of my account, so much easier to trade. I can do things like on Friday, it's going against me and I can keep my composure. I don't have to, I don't freak out about it. And so I don't have those ones where I have to puke and it blows up in my face and sends me into a bender all weekend, and that doesn't happen as much anymore. So I'm trading the appropriate size. But I will definitely tilt. I think I was a little tilted on Friday, to be honest with you. What's the win rate on the strategy that you use? Well, so for these micro treasuries, I'm shooting for 50%. I don't think I've been... I think that if I were to go for the whole year, let's go look. So if you look at my trading for the past year, I did really, really good for a time, and then we came into a period that was not very good. So you will see that in the stats if I show you here. There we go. So I won't show it to you here yet because I got to filter out like numbers here. So you can't see sensitive information, but we want to do like, let's say from the beginning of the year, maybe. Yeah. Ooh, yeah. So, when you come in here, what you see is, so it wasn't incorporating commissions into it at the beginning. So what you see is, because I'm only trading one lot and I'm trading super small, commissions and data fees are eating away my profits, right? But you can also see that I had a pretty good period. And then after the summer, kind of didn't go as well for me, right? So I've kind of been struggling, especially this period right here in October was very, very difficult. This one was a bender. That was like a one-day $100 loss. Want to minimize those, but those are going to happen every once in a while. But we'll also have some days where we make $100. We need to get more of those. But if we look at what's my win rate, you're going to see pretty close to 50% when you look at all. When you look at all trades, 48.2, which is slightly better than if, like I said, typically equal risk reward, you're gonna hit like 45% because of the spread. Now, my average favorable excursion is further than my adverse excursion. If we minimize this down to the period where I was doing well, you will actually probably see that my MFE is actually about 1.5 times my losers. But I was keeping the losers below 10 and the winners above 15. So that's kind of... So again, that's not like I don't set stops and targets, but that's like the averages of what ends up happening, right? So that's something, if I size it up, right? Size it up enough that it's paying for the commissions. But it's only 1 year. I always say, let me do it for 5 years and it would judge me on 5 years, right? Because we're worrying about 11 months of data in an industry where we measure performance on 5 to 30 years. So the profit factor for this is below 1. I wonder, so if we just go back to, let's see here. Let's just go till June. Let's change this and go till June. Oh 06. No, 07. 01. Lie. There we go. Okay. And then we pull the stats out here. This is only the trades in the micros, by the way. Yeah, Journalytics is amazing. Where did the profit factor part go? 105. Over 1. You know what? That's interesting. I was actually taking on more risk before than there was. That's interesting. Would really like to get that MFE up. Like if I could get MFE into like the 20s, that'd be awesome. You know, it's kind of like these stats are okay, but I still got a lot of work to do, right? Yeah, here before I was getting over 50% on some of these. How many trades did I take? A couple hundred, probably. $138. I try to be kind of like the snipers, so it like averages out to maybe 2 a day. But what'll happen is like I'll go whole week and then only take one trade. But the one day that I'll trade, but then I'll take a bunch of trades on that day is what's been happening with lately. Yeah. I'd say it's not bad. It's not amazing though. Right? Also, one of the things that I find it really ironic about trading is that the kind of results that people want to see, you know, you want to see like who's making the most money, who's doing the best, right? Like the crazier these stats are, the more likely it is that what they're doing is just taking on risk and that it's not going to last for them, right? You actually want to have something that's fairly gentle, right? I think we continue to work out a couple of bugs in my understanding of the market and so forth, and size up, and then size up and take on the risk, and you know that could be really rewarding, right? On the Journalytics laner board, you see people seeing hundreds of trades a day. Yeah, totally. Yeah, because you want to do the order flow scalping on the E-mini, you think that you can take an edge out every 5 seconds. And especially, I bet you notice that a lot of those people that their average loser is much larger than their average winner. Seeing oil take a little bit of a hit here, like maybe 30 cents in the last 5 minutes or so. Japanese yen has been gently moving up, and gold is starting to get hammered as well. So are we seeing dollar strength coming back in here? Yes, we are. We're seeing dollar strength. We're curious. And the S&P 500 did just open. I don't know why we didn't hear the ding. Sometimes we get it and sometimes we don't, and I don't know what determines that. Do you stream every day? Yes. Well, every work day, at least, right? Every weekday. It's really, this is probably my greatest strength, if I'm honest with myself. I don't think there is anything else that I do that is this far out of like line with what everybody else. Like my ability to do this is for some reason much greater than the average person's ability to do this. And I don't know why that is, but I am incredibly consistent when it comes to showing up. You can probably find like maybe a handful of days in the last 5 years that we've been doing, because we've been doing this since basically 2017. So in the last 5 years, there's maybe like 5 times where I didn't stream. And they were always planned days. So only like 2 days where I was like too sick and like came in and was like, we're not doing this stream today. Something like that, right? I was at one time. There was like that December before COVID, I got sick with something that apparently wasn't COVID, but I got sick with something that was crazy. Oh my gosh, that just had me out. It takes a lot of discipline. Yeah. I think that I'm pretty disciplined, but it's actually more than that. It's like there are definitely situations that you could put me in where I would just, like, you know, temptation wise or whatever, that I would just absolutely fail miserably at, right? But I just never put myself in those situations. You know, like if it's like certain food that is really not good for you to eat, but you want to eat it anyways, right? Well, I don't really have to hold myself because I'm pretty thin in general. But you know, if I am on the diet, I just don't have the food around. And then it's not a problem. Well, even if you can't make the stream, you can always listen to it on replay. In fact, I think I shouldn't tell you guys this, but one of the things that you can do now is because YouTube like transcribes the videos, like you can come back a day or two later and it will have the audio transcribed. And then there are these plugins that you can download that will put like a little window to tell you what the transcription is. So you can just like read the whole video in like probably 10 or 15 minutes and just read everything that we said in the whole 2-3 hours of streaming. Isn't that crazy? And then you could maybe feed it into ChatGPT and they could summarize it for you. Oh, that's all we need to do. Once I get my thing going, I should set that up. So I want to have my second computer here transcribe what I'm saying. What I should do is I should then have the AI summarize it and put it in a comment or the video description or something like that. Something's going on. Hold on. Don't know what that sound was. Was it here? Oh, maybe it was that. I think we're okay. How long would you advise me to learn order flow trading before going on a live account to trade? Well, so, I mean, if you can afford the combines and you're doing in a combine, then that's fine. Just the problem with the combine is you need to realize that they're really pushing you to take on a lot of risk. So I would recommend to people to trade more conservatively than what you have to do with the combine accounts. So if you can understand that and like go to the, you know, when you give up on combines and you go trade your own account that you can just shift to being more conservative, then cool. But you know, I traded on a sim account for a really, really long time. Even here on stream, I still will trade on sim a lot, to be honest with you. I only trade my live account when I really, really feel like I have a strong piece of information that suggests which way it's going to go. And you could do that for years. It's like the thing you got to remember, and it'll be easier for you because you're a kid, right? But your brain, it's a neural network, and it's like a living, breathing thing that you have to grow and develop, and that takes time. That involves coming in every day, watching the order flow, listening to the news, reading the financial news and so forth, and knowing what's going on and seeing how the market reacts to it. And as you consume that information, that neural network on its own just digests that information and creates the network, unconsciously, actually. And you just pass the information in, it spits out the answer, and you won't entirely understand how you know that, but you know it. It just spits out the answer. But that takes a long time, and I would say multiple years before you're really, really solidly into it. So a lot of advice out there is like to get you off of a sim account as quickly as possible. But I say if you don't really have an edge, trading the live account isn't doing you any good. So trade at sim until you're comfortable that you have a really good understanding of what's going on in the market. And this is another thing where, again, because of our understanding of order flow and everything else, we can really zero in on that. Because for most people, it's like, well, when are you ready? How do you know? You're trading a random line. Trading a random line. So is it like you had 1 month of profitability under your belt and then you're ready to go? No. But when I say like you're ready, you understand the market, it's like, what are the questions that you're asking, right? Because a lot of the questions that people have, they're not able to answer. Like, what kind of, if I put an order into the market, what kind of an impact does it have? Those are questions that we can answer. Why is trading so hard? Those are questions that we can answer. Does the market actually do this behavior? Can I answer that question? Right? And when you know those answers, you understand the other set of questions is like, what's going on in the economy? What's the deal with this non-farms report or this consumer sentiment number, right? Those are the sorts of questions where it's just like, okay, how well do I actually understand the market to be able to trade it now? But I would say that for most people, it's going to take more than a year. More than a year. What do you think of Peter's challenge of 4 months of profit? Nah, I've never heard him say that, but I would say meh. I think it would probably take you more than 4 months. Like part of the way that a neural network works is a little bit of it is your mind doing trial and error. I'll say, okay, so what if I use this framework? What happens? What if I use this framework? What happens? And then some people, they will just, the framework that their brain picks first just happens to do well in that market, right? So you'll always have some guy that's coming in that just seems to be having phenomenal success, right? So I think that some people that are kind of, like a Peter Davies or people that are at the brokerages or at the prop firms, right? They'll, since there's always this hot hand, they'll kind of get this idea that, oh yeah, like if you're not having success within this amount of time, then you should just give up because those people never go anywhere. But I would argue that a true lasting success, the kind of trader that I think people want to be, which is somebody that can be profitable over a 10-year time frame and not just a 1-year time frame, that takes a long time. That takes years of dedicated effort. Guess that's a very low bar definition of profitable, just some profit consistently. He talks about how people get to profitability in prop firms in a few weeks. It's more a challenge for people who have spent 10 years and tried every method. Well, so you gotta have, yeah. There's a lot of nuance in this about why those things are, right? So the first thing is that, again, we're talking about developing this mental model and this framework and everything, right? A really great way to accelerate that learning is watching other people, right? So you have somebody you can see the model that they're using. Now, I would argue that you don't want to just steal somebody else's edge. So like what most people do is they say, oh, what is your setup? And they try and copy their technical setup. That doesn't work. But what you can do is you can, for instance, you can watch this stream and you can see, okay, what is Seth talking about today? What macroeconomic things are he talking about today? What flows is he talking about today? And that will accelerate your learning considerably, right? And so if you're in a prop firm where you have people that are doing this and are really making real money, and you're able to watch them, yeah, that can accelerate your learning considerably for sure, right? But there's some other things, like a prop firm can potentially give you extra information that you wouldn't otherwise have as a retail trader. It can give you the ability to take on more risk that you might not otherwise have as a retail trader. So there's also other factors involved being in a prop firm that might help somebody become profitable faster, right? But I also would say the market is very competitive, and what most people are doing is they're trying to do technical analysis, and they take that over into order flow. Is they say, okay, here's technical analysis, here are all of the things about averages and, you know, standard deviation and yada yada yada, that's all involved in technical analysis. And then they say, okay, here's a new data that we have. Now we have all of these data series about what the market orders are doing versus the sell, sorry, what the buy market orders are doing compared to the sell market orders. And there's all of these data series for every single price of what the limit orders are there, right? And so now I can apply technical analysis to that. It's just like expanding the scope of what you can do technical analysis to. But the problem remains that your orders have impact. And so if it's like a really setup sort of a thing, the market arbitrages that away. And it's, you know, so these people are just constantly chasing, you know, are just constantly behind the curve. They're constantly chasing after something. As soon as they find out about it, there's some new course or something, the edge has already been taken out. And they're not able to come in and find, you know, edge that not everybody has. Identify mispricings that the market hasn't correctly factored for yet. And I think that that's why you get these people that they continue to fail after doing it for like 10. I've met people that like 10, 20 years plus, and they've never had any success with the trading, right? You look at me, I'm not making millions of dollars, but I'm doing pretty okay with it, right? That's something that's like, okay, where are you going to be in 5 years? You might actually be making some pretty big money with it, right? But that's only because I have a framework that I think is pretty likely to lead you to success if you stick with it long enough and you do the work. Most people won't. But we are basically avoiding the major pitfall that's causing all of these people to fail. And that pitfall is technical analysis. And even Peter, I would argue, falls into the trap of technical analysis, or has in the past. Oh, I forgot to say goodbye to Jahil, but thanks for stopping by. I think one of the first people I'd met in trading, that's Australian again. I tell you what, when he started talking, he liked to talk. He was always so excited about it, whatever he was doing. And his whole thing was like, I'm just going to put as many things up as possible, and whatever is working that day, I'm going to go and I'm going to trade that thing. But yeah, it didn't work. That's what I think a lot of these generational machine learning algorithms were trying to do, right? Was take every possible technical analysis thing possible out there, and then see what's working the best right now, and then go and trade that. And it worked for a while, but apparently it stopped working for them. That was when the quant crunch came. Those firms all got destroyed. It's another Peter Davis point. But retail just wants setups, whereas prop firms teach market behaviors, let developing traders figure out their own setups. I don't know. Like one of the things is that, for instance, Axia. It seems to me that the people at Axia have had some success, and they do have some frameworks that are incredibly useful to trading. But I don't think that they fully understand where these behaviors are coming from and what the true specific nature of them are and so forth. Because I'll see them describe the things, but then there's stuff within what they're saying that I'll know, or it's like, well, that's not exactly true. It's not this, it's not that, right? They have not read trades, quotes, and prices, basically. Right? Because I think the thing that trades, quotes, and prices does for us is it takes the things that, you know, a trader has been successful with this, and all they know is that it works for them, and they might not completely understand why, right? What trades, quotes, and prices does is it takes it out and it proves empirically why some of these things might be true. What is the actual like nature of it that causes the market to be this way, right? And that's how you're able to arrive at this place where it's, like I said, the market is very statistically efficient, but not very informationally efficient. If you trade on something, it removes that edge from the market. So the only way for like a technical pattern, quote unquote, to like persist in the market is for it to be built into the market microstructure. The biggest fallacy, like the thing about the thing that the technical analysis world teaches that is the most wrong is that the market is consistent because people's behavior doesn't change. It's nonsense. People are incredibly random. And they adjust to the world very, very quickly. And so if the market has a tendency to do something, the people adjust to that tendency very quickly. So they're absolutely wrong. If there's a behavior that's going to be persistent, it's because it's built into the structure of the market, that there are like rules and math that basically causes it to play out in a certain way. And there is. It's just that if those edges are already known to the market, somebody's already making money from it, and then it turns into whoever's the fastest that gets that edge, right? So those ones aren't really available to us, but they do result in behaviors in the markets. For instance, the liquidity hole will have a tendency to like move up and then like get stuck in this hole and rotate around. Like here, 040 is where we've kind of been lately. Actually, I'd say it's 0.4, but you know, we've spent a lot of time in that spot. It's a liquidity hole. But what happens is too many transactions happened there. There aren't very many market makers willing to put liquidity up in that area, but there are a lot of people willing to put bids at like 0.3 half and offers at like 0.4, 0.5 half. And so it requires a much more aggressive volume to push us outside of that range. And we kind of understand why this happens, and it's kind of like a statistical behavior that also has other interesting consequences on the market, like the square root law of meta order impact. So if somebody buys a whole lot of something, and then the next day they decide to buy twice as much, the market won't go twice as far that next day. It only goes 1.141. You know, it's a square root law. The square root is spot 2. So, you know, these are like the actual, like real mathematical, like very specific things that we can prove, right? Once you put it into that framework and you understand all this other stuff, then there's a lot of other things that people say in the market that you'll immediately know why that's not even worth wasting your time with, right? So that's where you can get to this thing where it's like, well, yeah, any pattern that you think you see is not going to be useful. That doesn't mean that it's pointless to trade. It's just the way that you have to figure out what's going to happen is way more complicated, right? You have to know, what are the flows likely to be? Like, do these people need to buy or sell or whatever and do it that way? The past market action can't predict that, but you can predict it with other information. Usually information from outside of the market, right? Saw your interview with Gary and was curious what you think about it. Well, I think People bring this up a lot. I think the reason that this comes up is because people are watching this like, okay, so based on Seth's interview with Gary, should I buy his course? Well, I think that I kind of talked about it in there, but it was like, what he's teaching is a very hard way to trade. And it's something that in a lot of markets, you can't, like, trying to do that in the 10-year. I don't know if you'd have a lot of success with it, to be honest with you. It's just too tight in the 10-year. Playing the cues is just too tight. But it is a real art that I hope doesn't get lost. I don't want the robots to be the only ones that understand market making strategies, right? But you're probably going to be easier for you to find an edge by studying the market and understanding what's going on, taking a little bit higher time frame trades. And of course, understanding what's going on in the market, that does help you with the market making sort of a thing too. So there's a lot of things that we can learn from him, but do you want to spend as much money as he wants? You have to be the right person to for that to really be worth it for you, right? I think I kind of said that in the thing. And so it was more like, what are the things that we can pull from Gary that we can actively understand the market about? And a lot of it is really just commiserating about the state of the retail market and why the retail trading community is the way that it is, right? Well, it's because people have the tendency to want to see patterns and to want to make seeing patterns their whole strategy. And that would work in pretty much any other field except for this, because why? Markets are statistically efficient. Because your trades affect the market. Is there a way to code price range using the footprint? What do you mean by that? I mean, probably yes. I'm still a little suspicious of this market. So there was a little bit of buying in the 10-year since the open. I'm going to say negative 151, negative 141. There was a very, very small 10,000 net change contracts to get up to here. Now it's gone flat. So I think that means there was a meta order and now we got nothing, maybe. But the market is kind of behaving. I'm seeing individual ticks that kind of are like, oh, something actually is happening, Seth, and then nothing happens, right? I tell you what, I don't think that there will ever be anything quite as interesting as the market. There's just nothing that can take so much of your focus and attention. It's just the most complicated and interesting thing that could ever possibly exist. Some things, you can figure them out, and then that's the answer, and then that's all there is to it, But that's never the case with the market, because every day is different. Every day you have different sets of people with different motivations and needs coming into the market. And the better we can anticipate those needs, the better we can predict those flows. But no 2 days are going to be the same because the world is constantly evolving and changing. I don't know how to explain that to people in a way that's like this viral moment and it picks up and everybody's like, oh, that's so great. And they all watch it. And then retail trading is forever changed. And we don't have all of these people trying to chase, wasting their time with technical analysis that's never going to do anything for them. It's just like if you're trying to make an airplane and everybody in the airplane making community is trying to use chicken bones to figure out how to make an airplane, it's like Coming in here to see if there's any. I haven't really heard a whole lot from my news squawk this morning. Oh, well, crypto is like a 1 week low. Actually, we didn't pull up crypto when I was doing my morning rundown. I just forgot to. I did make a note on Friday. So if you subscribe to my Patreon, you can go check that out. But there was a little bit of a sell over the weekend. That doesn't take us back below 40K. I think that if we got back below 40K, that there'd be a little bit of people being upset by it. Then it would probably fight it. It'd probably be like as it gets below 40K, somebody would buy the dip, right? Probably. Financial juice, CPI prep. Okay. Well, if we come back to Forex Factory, we should have done this when we were talking about it, but what is the anticipation here? CPI month over month is expected to be 0 versus 0 from the month before. Yeah, because oil has declined recently, and so that's probably why that ends up being 0. But the core CPI, they're expecting to be spot 3 versus a spot 2. So with the way that the numbers have been lately, they would very much prefer to get spot 2. Okay. If we continue to get spot 3, then that's pretty likely to lead us to being above target, right? And that's where you get like year over year, 3%. Yeah. Okay. So if CPI was spot 4, market would throw a real fit, right? That would like instantly halt the market and cause. But that one's probably not as likely to happen, but it's still within the realm of possibilities. You could get a spot 2, which I think the market would probably interpret pretty bullishly. If you got a spot 1, that would be amazing, but I don't know if you'll actually get that. So price is creating an accumulating range. The schematic is there as a way for footprint makes easier to code rather than say candles. So I have an indicator that when a range is held for a certain amount of time, it will draw a box around it. I suppose that could probably be adapted into a chart time frame type of sorts, so that it's normally like 1 minute chart, except for when it gets stuck in a range, then it gets consolidated in there, and then the footprint would show you that consolidated range. That would be pretty complicated. I don't know if it would really help you a whole lot. This kind of comes back to technical analysis again. We'll use footprints, and here's all these numbers, and so then we look for patterns in these numbers that we think might predict the future, but they're really not. I think that cumulative delta is more useful to you than footprint. Like what do I actually want to see? I want to see there's slightly more buying than selling through this range, even though we've been in a range. And it's persistently so, which does suggest there was somebody executing a meta order buying through that, like we saw earlier in the day. Now it's just flat, so probably not a trade for us. Let's see here. Oh, yeah, so we're going to read this. Okay. For U.S. CPI year over year, the median forecast sees it moving down to 3.1 from 3.2, according to a survey of 44 economists. The highest estimate is at 3.3, and the lowest is 3. Okay, so not a very wide range of expectations. Median forecast for CPI month over month is a move down to 0 from 0. Highest estimate is 0.3, and the lowest is negative 0.1. Wells Fargo, we expect lower gasoline prices to hold the headline rate of inflation flat in November and forecast the core CPI, which excludes food and energy, to rise spot 3, signaling slower progress on underlying inflation. A miss to the upside may drive the market reaction, spurring higher yields, but we ultimately doubt the CPI will materially change the outcome of the Fed meeting, where it is essentially universally expected the FOMC will elect to keep rates on hold. More on that in the interest rate watch. If our CPI forecast is realized, the annual rate of headline inflation would slip to its lowest level since March 2021, while the core rate would remain unchanged from a month earlier at 4%. Some payback after volatile travel-related declines in October will be responsible for some of the rise in core inflation, but other areas should decelerate further, including primary shelter and goods prices, which look set to decline for the 6th straight month. While inflation pressure continues to subside, there is still ground to cover before declaring victory. I don't know if I want to read all of these. Previous release. U.S. core came in at 3.2 on the forecast of 3.3, while the U.S. core CPI came in at 4% on the forecast of 4.1. This caused strength in the S&P and weakness in the dollar and U.S. government bond yields, as markets noted this cooling of inflation as indicative of a U.S. interest rate cuts earlier than previously expected. That's a pretty good little write-up that they did there for Financial Juice. I like it. Will the next generation shit on millennials like how we should? Oh, absolutely. They're already doing it. But they're not very good at it. They think that they own the internet, and they don't realize that millennials are the dominant demographic on the internet still. We're starting to see very rapid responses to Trump's stumbles. Biden aggressively calls out his predecessor. Yeah, you notice this very active strategy of, the reason that Biden's numbers are so poor is because people think that he's senile. And so their strategy as well, if we can make them think that Trump is senile too, then they cancel each other out, right? Very, very transparently obvious strategy from them, right? Oh, there you go. Politically engaged Redditors tend to be more toxic, even in non-political subreddits. Sounds right to me. Guilty. Guilty. There you go. Anonymity online, increasingly extreme political polarization does seem to lead to an intense hostile climate in political discussions. A few years back, I stepped mostly back from arguing politics on Reddit because it just made me feel angry and bitter. And somebody says, wait till you hear about this thing called Facebook, right? Yeah, okay, so on Facebook, you're supposed to be with your real name, and it didn't really make things any better, did it? I don't think that it's just anonymity. Seems like there's a little bit of a cap here, but they may break out. This is one where I bet you that if I tried as she goes here, that it probably goes like for brief and then reverses, right? I don't know if that's one's a winner or not, but we'll find out here in a little bit. There's somebody on Reddit asking, is this so-and-so in the trading world legitimate? Well, my response would be, are they teaching you technical analysis? Because if they're teaching you technical analysis, then they're probably a fraud, yes. Probably a charlatan. Well, they were able to make 05 half go bid for a second, but it didn't extend. Not yet, at least. Yen plummets on report that Bank of Japan will not hike rates anytime soon. I'm not seeing that. Biden pressures the allegedly independent Fed to stop rate hikes? How's that? Let's see. Authored by Mike Shedlock by a Mishtalk. President Joe Biden said Friday's jobs report shows the labor market remains resilient as inflation continues to rise, an economic sweet spot that he said shouldn't prompt the Federal Reserve to raise rates further. The comments marked a rare example of Biden weighing in on central bank policymaking. They came as President gears up for a re-election campaign that will be decided in part on his stewardship of the U.S. economy, which voters have rated poorly, polls show. The U.S. labor market unexpectedly strengthened in November, adding 199,000 jobs and showing wage growth that tempered bets the Fed would cut rates early next year. That should be considered a solid, steady increase, Biden said Friday. The president called the figure a sweet spot that's needed for stable growth and lower inflation, not encouraging the Fed to raise interest rates during a speech in Las Vegas. Recent presidents have refrained from routinely commenting on the Fed, wary of eroding the bank's traditional independence to set monetary policy and giving the impression that decisions are driven by politics. Okay, so is just commenting on the data publicly in a way that is mostly in line with what the Federal Reserve is already kind of saying, really trying to push the Federal Reserve to make... No, I don't think so. I think that they are trying to just hold the line with what the Fed's already saying. I do think it's maybe possible that we see rate increases early next year. Just not 5. Just not 5, like the market was pricing. No, I don't think that that's actually him trying to do that. Does kind of make you wonder, though, if they start to move into, no, we're not going to lower rates yet, and then they start saying, oh well, we should though. Well, they are hitting 60, but it's still kind of like, So pretty quiet for a Monday, man. Oh, you know what? Mondays usually are pretty quiet, but the last few Mondays were actually pretty exciting. But not this time. See, this time it's really tight. Why millennials are behind when it comes to saving for retirement and what they can do to get ahead. I actually don't think that that's true. Is it true? Okay, let's go look. Because I've read some things that say that boomers are really, really behind on retirement saving and that a lot of millennials will be better. Cards seem to be stacked against millennials when it comes to making the most of their finances, between inflation now being at its highest rate in nearly 40 years and the cost of owning a home becoming increasingly expensive and student loan debt preventing many from saving for short or long-term financial goals. Hey guys, you have student loan debt, don't let that prevent you from contributing to your 401k and getting the employer match, okay? Always that's first. That's first. And then pay your college debt, okay? While millennials as a whole are making an effort to save for the future, they are still behind previous generations when it comes to building up their retirement savings. According to Fidelity's Retirement Savings Assessment Study, millennials are ranked higher than Gen Xers on their retirement preparedness scale, in part because they had increased their savings rate from 7.5% to 9.7% over the last 2 years. So why do millennials lag behind their elder cohorts when it comes to retirement savings? By the way, what that just said was basically contradicted the title, right? It's basically like, actually, millennials are doing really good at saving. It's just they just don't have as much assets yet. Below, the Select explores this question further by speaking, blah, blah, blah. And now they want me to watch a video? No, thank you. The study I did follows a study we did earlier that showed that millennials were behind on a lot of indicators, including earnings, labor force participation, marital status, and home ownership. Now, there's a cohort of millennials that are in their late 20s and late 30s. They seem to have caught up on a lot of these key metrics that we would care about. That's probably me. Since so many millennials graduated from college during the dot-com bubble in the early 2000s and the Great Recession 2008, they were thought to have worse labor market outcomes than previous generations. Jen notes that economic downturns negatively impact new graduates as they tend to have difficulty finding jobs or end up taking lower paying jobs shortly after graduation. Research also indicates when new graduates enter the workforce during a recession, their earnings are lower. So I would think, if you entered the market during a recession, that when things start to get good again, that you would want to go in and, immediately go and try and get a better job. Hold on a second. What is Okay, we're fine. The study also found that by the time most millennial men and women are in their 30s, they have caught up to earlier generations on metrics such as labor force participation and earnings. Millennials also have higher college graduation education rates than previous generations and similar home ownership rates to Gen Xers and baby boomers. Oh, really? Okay. I really think it's like the haves and haves not, right? There's this huge section of people that are still in their 20s that aren't doing very well, and they're the ones that are. But when you look at as a whole, that it's still pretty typical, and it's just that the people that are doing well are afraid to speak up because they know everybody will hate them. So if millennials are more educated, have similar rates of home ownership as previous generations, and their earning potential hasn't been hindered by 2 economic downturns, why are they still behind on saving? Turns out student loan debt was the primary reason why many millennials were behind in building sustainable wealth. 40% had student loan debt. Okay. But they are retiring. They're just not contributing as much as the other generations have. But they don't have as much because that... I don't know. It still kind of suggests to me that millennials are not actually as uniquely poor as the internet would like you to believe. This person, by my math, will need about $3.2 million in retirement. I'm on track, but it takes saving like 28% of my income for retirement on top of an 8% employer match. What? You're probably got some math wrong. Yeah, and the recent studies I've read, they state that all generations are behind for retirement. True. But for their age, millennials and Gen Z are doing better on average as far as savings are concerned. It's true. But probably largely because of automatic enrollments in 401k. Yes. Interesting story. Oh, I'm not going to read that one. Sorry. Well, they didn't extend 06, so... There you go. Alligator says the exact same thing. So somebody said balance days are good for reversion style trades. Well, that's true. But on a day that's this tight, I don't think the risk is worth it. This is like... This is possibly the tightest day all year. This is definitely like... This has been a really slow day, man. I'm glad that we had some good stuff at the beginning of the stream to talk about, because Otherwise, this would have been like a mind-numbingly boring day today. Probably because they're all waiting for CPI tomorrow. Today I learned the Pontiac Aztec was universally disliked by focus groups. One respondent even said, "I wouldn't take it as a gift." GM continued to press forward with the Aztec's design despite the negative reception. Yeah, I remember that car being universally disliked as well. The GM machine was in such denial that it rejected the research and just said, "What do those a-holes know?" Wow. She's built like a steakhouse, but handles like a bistro. It's really sad that they don't make Pontiac cars anymore, though, man. I would love to see a new version of a Trans Am or something like that, you know? Oops. The Aztec died, so all of today's crossovers could live. Oh, that's right. I was trying to remember who Sal Guerrero is, but this is a vendor that has a platform. That's why his name is green. One could only hope, right? It really is a tight day, guys. This is I was just saying here in Discord, this is possibly the tightest day in the ZN of the whole year. If it's not the most, it's on par with the most. This is tight. I have had sessions where it was like only an 8 tick range for the whole session, but holy crap, guys. I'm surprised there's so many people on Reddit talking about a freaking Aztec car. Oh, now we're actually getting something coming in here now. That's a lot of selling come in all of a sudden. Yeah. I find it really curiousing. That's funny. I find it really curious that the treasuries have been so tight, but gold has been pretty consistently sell all day long. What? Goldman says buy the dip if stocks drop after repricing Fed cuts, says Bloomberg. That's probably right. Bloomberg opinion, the Biden campaign needs to pivot to marijuana. That, you know what? You wouldn't want to start talking about it yet, but that could certainly be a real what is the word, wrench? I don't know. That could be a real wild card you could throw into the presidential election that would work in Biden's favor, probably, yes. What? Wait, what? Mel Gibson's Passion of the Christ sequel to be shot in Rome in January and set to follow Jesus' descent into hell and fall of the angels. What? Is that a thing in Catholicism? Explain this to me. Apparently, many Christians believe that Jesus descended into hell after. That doesn't say that in the Bible, does it? Jesus 1v1 Satan in Mortal Kombat, right? Yes. I can't believe we're entering the dawn of the Jesus cinematic universe. Oh my gosh. People. Doom story. Yeah. In today's Christianity, Dante's opera is more accepted than the Bible itself, right? And still, I mean, it's still getting held down there. This, this could get really interesting if they break out, right? That would be such a surprise to me. I think the most likely thing is if we went for the mean reversion here and bought it, it will plow through us, and then as soon as we gave up on it, it would come back up, right? That's what the most likely thing to happen. Yeah, there you go. This person, I'm reading a thread about somebody on YouTube saying, "Oh, my channel all of a sudden it stopped working," and it was like, I think there's somebody view botted the channel. He was helping the numbers, and I was like, well, if that's your theory, why didn't you say an original post? Okay. Uh-oh, Vivek Ramaswamy caught an embarrassing hot mic moment during SpaceX event with Elon Musk. What did he say? Ramaswamy's unscheduled bathroom trip. Oh, what? That's the worst you've got? As Mr. Musk explained his decision to allow InfoWars founder back on his social media site. We didn't even talk about Alex Jones, but that's going to be fun. Mr. Ramaswamy announced that nature was calling. Gentlemen, I have to go, Mr. Ramaswamy said. As the conversation continued, the sound of what appears to be someone urinating can be heard. Oh, wow. So they did not mute him when he went to the bathroom. Because he was on a space and he didn't mute himself on his phone. That's funny. I hope you feel better, Mr. Musk told the entrepreneur. I feel great, Mr. Ramaswamy replies. That's not as big of a deal as the headline is making it out to be, but it's still pretty funny. Vivek is literally draining the swamp, one user posted. My gosh, that's effing hilarious. Oh my gosh. Oh, that's funny. Hey, Tacticals, thanks for stopping by. Come back tomorrow. Don't be late tomorrow, because that CPI is going to be, it's going to be a big deal. I don't know. It's not as big as past CPIs, maybe, but it seems like the market is waiting for it, so. Israel says it has captured Palestine Square and Gaza City, main Gaza stronghold of Hamas. It does kind of sound like it's mostly over. Chronic fatigue syndrome is not rare, says new CDC survey. I don't know what that's about. Macy's receives $5.8 billion buyout offer from who? That would be interesting. Romney says Haley is the only one that has a shot to beat Trump for the GOP nomination. Uh-huh. You know what? If Ron DeSantis had taken the hawk approach on Ukraine, I think that this would be a competitive race. Because what happened was he positioned himself as the Trump alternative, but going full, basically trying to be pro-Trump and everything. But the audience that in the Republican Party that doesn't want Trump are primarily foreign policy hawks. So you lose them, then who's your audience? But I don't know. I guess good for DeSantis for sticking to his guns or whatever. But it's funny that all of these people are now saying Haley. I don't think that Haley stands a chance at beating Donald Trump in a GOP nomination, because she's taken the other tack, which is just all in on, war in everywhere. And it is what in the last debate, it was grating. It's like, really is like, oh, she really does seem bought and paid for. She really does this is not going to play well with the base at all. I think, in fact, you could maybe even, I think that if Haley was the nominee, you would see a lot of Republicans stay home. I don't know if it would result in Republicans losing, but I think that would really, really, because I think the Republican Party is really sick of, I don't think that Republicans want to abandon Ukraine, for instance, but I do think that Republicans are tired of endless wars and feeling like the military industrial complex is running everything and spending all of our money, sort of a thing, right? So you have to there's this thin line you have to play, and neither of them did it, but I think that you would probably rather be on Trump's side than on Haley's side. Does that make sense? Oh man, you know what? It's so funny that ever since Mitt Romney lost his presidential run, I disagree with almost everything he effing says. There you go. Spoken like a true Democrat. Yeah. Yep. Still got about 5 minutes here. Well, despite that selling that we saw in the treasury, it's reverted back up. So I guess the mean reversion trade there was the right one. It's only 4 ticks, but it was the right one. Wait, what? Hunter Biden made $1,664,004 in ATM cash withdrawals and spent $683,000 in payments to various women and spent $188,000 on quote, adult entertainment, but paid 0 income tax for years. Wow, when you put it that way, that's like nuts. Okay, new question. Why do the at the market orders sometimes disappear? Does that mean anything? That's a good question. Wish you could ask that earlier because we could talk about that for like 30 minutes. but the quick answer is this. Let's say that I'm a market maker. Well, let's not say it, but I work for a large institution, right? I want to be at the front of the queue. Well, how do I do that? One thing that I can do is if we're moving up, and I'm pretty confident that it's going to keep moving up, what I can do is I can put limit orders in as it moves up. Well, the queue is still relatively small. That gets me in at the beginning. And then, if we move around and then we're coming back and I see that like this bid is about to go away and I have a really good spot on the bid below that, I might hit into this with a market order and then expect them to fill this other order very quickly because I'm at the front of the queue. So this is called a crocodile. Well, some institutions kind of take this to the extreme, right? They always want to have the best spot in line, even if they have absolutely no intention of executing it at that point, right? So what they'll do is they'll set an algorithm that always stacks. And then if there is any kind of volume comes through at all, they will pull. Like if there's any risk of those orders getting executed when they don't actively want them to, they get pulled. So these orders are what I refer to as placeholders. They're basically, they are saving a place in line, but they aren't intended to be executed. So when you see the treasury tick up or down, you will almost always see 500 to 1,000 contracts cancel because of that placeholder phenomenon, right? But when more than that pulls, now you got something going on. So one thing is that there are other market makers that they have orders at every price, and they're placing their orders based on some correlated asset, like some combination of the other treasuries and the Japanese yen and the dollar or something like that, gives them relative to those correlated instruments a best bid, best ask based on that, right? So sometimes the correlated instrument ticks down, and so now the robot no longer wants to take those orders, right? So that's another thing that will happen. That would be like it ticks up. There's 1,000 on there. It ticks up, and then another 500 pull or something like that. And so when it gets, you're only left with like 900 contracts or something like that, right? And the more extreme that is, probably the more solid of a move it was across all of the markets, right? But you can also see things like, for instance, at 10 half or 110 0 0 half. There's 4,183 down there, right? So if we came down to these prices, I would expect there to be some of these orders to pull. For there to, not to trade 3,000, that it would be like it'd pull and it'd be 2,000, right? But if we get down there and it pulls and all of a sudden there's only 500 contracts there, that's a significant pull, right? That's a very significant pull. That might even be into the spoofing kind of category. Okay, but so what are the takeaways from this? Okay, first of all, just realize that a large portion of the liquidity is actually just placeholders. Okay. If you want to see like what are the real latent liquidity conditions, you kind of have to watch it as it trades back and forth a few times, right? So like I'm watching this right now. So there's 654. And if they trade up again, does it take 654 to actually trade up? And do they trade that back and forth? And I'm kind of looking at that. Because they might trade back and forth across that price and trade 1,000 contracts each time versus trade back and forth and only trade 200 contracts at a time, right? That kind of tells you something about how willing the market makers are to take up inventory in that area, right? So the orders pulling, stacking and pulling are a really good indication of what the robots that are both doing placeholders and looking at correlated markets think. That's why I think a lot of people have done studies and they say, oh, you look at the orders that pull, that's the most indicative thing of where price goes. Well, yes, but that doesn't give you an edge, right? That just kind of keeps you in line with what's going on, right? Now, where it becomes significant is when you start seeing that happen, like price after price after price, right? Ticks up, bid stacks, offer pulls, only takes 300 contracts to take it bid, and it does that price after price after price. That's a real trend. That somebody is pushing the market. You want to get on those as early as you can. Right? So part of this is I strongly encourage you to use the information that you know about the market, what's going on. For instance, today there's an auction, so there's some of that going on. It's a Monday. Mondays tend to be lighter days in activity-wise. There's a CPI tomorrow, so a lot of people are holding off on doing anything because of the CPI. And we had a big thing on Friday, so there maybe are some people thinking that interest rates should reprice. So those are like the flows that we have here together, and we can take that together to try and get a prediction of what we think the flows are going to be. So if I think that the flows are going to be short, and then I start to get some of that action where, it starts moving in that way, the bids all pull out of the way, or it doesn't matter what's on there. They just sell all of it, right? That's the trend that I was looking for, and then I can get in based on that, right? So does that make sense? The order is canceling does mean something, but it doesn't mean a lot. But it can be a significant thing when you combine it with other information. Yep. And okay, cool. So then the last thing I'll leave you with, I got to get going here, is part of this is just watching it every day, knowing why the market, the flows that are potentially in there, watching how the liquidity reacts to the market orders and the market buys versus market sells, and doing that every day. And your brain just kind of like processes all of that information, puts it into your machine learning model, and someday you'll understand, because you notice some of what I'm saying is like very vague. It's like I understand why these things happen, but like how I come in and say, okay, this one is actually a trend and this one's not, I don't think I completely understand how I do that. That's my brain, my neural network doing stuff that we don't consciously understand, right? And you have to just come in and watch it every day to build that. So, all right, it's time for me to get going. We'll put in the title that today was the most boring range-bound day ever. Tight Monday ahead of heavy news week. That's what I will put. Oh, and I need to change the date to the 11th, not the 9th. All right, guys. I will see you tomorrow. Don't miss the CPI. It's going to be big. In the meantime, stay excellent, team.